Hi, everyone. Thank you for joining this new episode of our podcast, Let's Talk. I am here with my co-host, Dimitri. Myself, it's Akim, etc. on eToro. And we have a special guest, Adamos. Adamos, welcome. Thank you for joining. We will discuss a little bit about your strategy, but also your beautiful newsletter, very successful one. And we will discuss some of the top stocks you have in your portfolio. So the first question actually I have, is stock picking dead?
First of all, hello from myself as well. And thank you for having me here, Akim and Dimitris. And back to your question about stock picking, whether it's dead, I don't think it's dead. I mean, we've seen many investors outperforming the indices, and that's not just pure luck, it's due to skill. Okay, you have the factor of luck by default, but it's also a matter of skill. So I believe it's not dead. And that's why I'm using stock picking for my portfolio.
I think Dimitri had a question about one of your top 3 stocks, right? Go ahead, Dimitri. I see you boiling there.
So I looked your portfolio, Adamos, and it's like it's tech heavy. It has a lot of technology in it. And I was wondering, every single position I get, the one I want you to explain to me is PayPal. Please tell me the story of
PayPal, okay. That was one of the first positions.
I note that you are laughing also. Eh? I'm noting that you are also laughing, Adamos.
Yeah, because PayPal, it's been a pain in my portfolio. I mean, it's the only loss-making position I have right now with Lululemon after the fall last night. But okay, about PayPal. When I started evaluating PayPal, it was a clear leader. I mean, it had the branded checkout. It was giving out estimates of 750 million customers. I mean, the estimates were over-extrapolated. Then the CFO left. The CEO recently changed. And what I've seen in my analysis, I did a deep analysis last June or July. I've seen that the volume of PayPal, it's not actually falling behind peers. I mean, if you look at the total process volume of Braintree, which is similar to Adyen and Stripe, they have similar volumes. So PayPal manages to gain traction through the Braintree platform, and at the same time offer the more advanced integrations of its branded checkout. So I believe currently there is strategy to grow. But on the other hand, this space appears to be commoditized. I mean, the fintech space is commoditized. You have Revolut, you have Wise. I mean, everyone is on that fintech space. On the other hand, it's a large space. PayPal is used for e-commerce purchases, and e-commerce it's not expected to decline, at least in the near future. So given its financials and how it performs against peers, I'm happy with PayPal. But to be fair, in my mind, I need to dive deeper into Adyen as well. That's what I have in my plan for the next few months. And I will take a better decision if I prefer Adyen over PayPal, because I've seen it on the one side, but not the other side.
If still about PayPal, a few months ago, so not so long ago, the CEO mentioned that they were going to reveal something really big in terms of AI, and that didn't happen, and shareholders were disappointed. Is there still something big going to happen in PayPal? Is PayPal some kind of AI play, or is AI completely out of the picture here?
To be fair, I don't think, and I don't base my thesis on PayPal coming with big AI in development. I mean, PayPal is used for e-commerce. That's its main scope, not for AI. But I believe with the data that it has and using AI tools, it can give better offering to merchants and customers. but not coming with a new AI tool like Meta is planning, like Adobe did, like Google with Gemini, etc. I don't see that personally.
Mhm.
But
No, go ahead. Finish your
but okay, I mean, if they're gonna surprise us, why not? But I don't see that. That was the point.
Mhm.
So when I looked your portfolio and I went through it really quickly, we have most of our positions are kind of similar. We have like a lot of tech, and I have a position that is questionable, which is Rivian. And the only position that I saw in your portfolio, and I told Akim, I'm going to ask him about PayPal. I'm curious to see what he sees in PayPal, because you know what? I did not dig into it too much. So you might have some info that I wasn't aware of. But the only problem I have with PayPal is, and please correct me if I'm wrong, is it a PayPal, an app that it was used by a generation, by the previous generation? Because I know nowadays the young kids between the age of 20 and 30, they mostly Revolut in Europe. In America, they have Venmo. So PayPal is not, it used to be like 15 years ago when you wanted to buy something from eBay and you didn't know if the guy who was selling you from eBay was going to just steal your money and don't ship the product. That was what PayPal was like, in the middle, just PayPal, you know. But that's the only concern I have about PayPal. And it wasn't a question, by the way, it was just a statement what I think about PayPal. But as far as your whole portfolio, that's the only one position I wanted to ask you about. But then we're going to compare that with the rest of them.
Yeah,
By the way,
Dimitri,
now
yeah.
sorry, now you mentioned it, Dimitris. PayPal owns Venmo.
Oh,
So
is it?
yes,
Yeah, I didn't know
yes, yes. So that's another plus. And the key growth drivers for Venmo, for PayPal, it's Venmo
that. Oh,
and Braintree. Yeah.
interesting. Interesting.
So it's not just the PayPal button.
Okay.
Yeah.
Okay, good to know. I didn't know that.
Mhm.
Go ahead, Akim.
But I think you put still the finger on something, Dimitri, is the lack of innovation. I think this is what you're saying between the lines, that the older generation is using and the new generation or less, is perhaps the lack of innovation in PayPal. Because I have PayPal, I use it from time to time, but I use it, but it's really, it doesn't convince me. It's not, I would never transfer my wealth to PayPal and to use it on a daily basis. I use it from time to time. If there's a website that feels a bit shady, but I want to buy something from it, I use PayPal, right? But it's really rare, and the fees really bother me. For example, I can have dollars, but they force me, so I want to withdraw my dollars from PayPal. They force me to convert it into euros in order to withdraw it. So it's really not customer friendly. You have some fees that are imposed on you that makes me not trust PayPal. And I think PayPal is currently in a vicious cycle where it's trying to collect fees from the users, but by doing so, it chases away those users. And they also try to implement crypto purchases. If you go on the PayPal app, you will see that you can buy also crypto. But to buy crypto, I need to convert into euros and then to buy. And there's also a fee to buy cryptos, and there are only a few of them. So I don't see anymore the edge that it used to have. Especially as Dimitri mentioned, now you have Revolut and you have some other companies where you can have disposable credit cards, right? If you don't trust the website, you can buy crypto if you want from Revolut. If you don't want to be buying on crypto platforms, you even earn interest, right, on your deposit, on your savings in Revolut. This you don't have in PayPal. So what could be potential growth catalysts for PayPal? Because it feels like a declining company to some extent, at least in terms of innovation. What could be potential growth catalysts here? Is it just geographic expansion going into being more and more used in India that will help it to grow? Or are there some other growth catalysts like, I don't know, PayPal purchasing other companies like it did with Venmo very successfully? What potential catalysts you see? Because if you hold the stock currently and it's in your top three, I assume that you expect some high growth or at least some potential high growth in a somewhat near future.
Okay. So it's not top three, by the way. It's number 6 right now in my portfolio.
Sorry, I was mentioning in terms of invested amount, but yes, in terms of
Okay. Okay.
current portfolio value, yes, it's your sixth
Yeah.
position.
So the catalyst. Okay. Now what you mentioned about the product and all these issues are true. I mean, I have an example. I wanted to pay with USD through PayPal, and instead of putting euro in PayPal to exchange those in USD, I've used Revolut and then put USD in PayPal because their fees are indeed not competitive. They are not competitive. I believe that they are trying to fix this issue on the fees because, I mean, they are not stupid. They can see the market where it's moving. But what I see as catalysts are mainly coming, okay, one part is security and trust because the merchants and the users, they trust PayPal. They know that their transaction is not gonna be lost anywhere due to scam or something. And that's a good plus. I mean, if you are moving hundreds of dollars and not just few amounts, it's important. Now, on the other part about Venmo as a catalyst, I mean, Venmo, it's where it has great appeal in US, but still it's not very commonly used to make purchases in store, etc. They tried to do that with Amazon, and then they separate this agreement. But I think that monetization, if ever comes to reality, because it should come, it's a clear path to succeed, it will increase the gross payment volume of PayPal. And another factor is the PPC, the PayPal completes payment, which mainly it's like Braintree, which is in the US with larger customers and the take rate is small. Think of it like Stripe, but they are gonna implement that in Europe and in other countries, and they expect to see margin expansion due to this. And given how fast Braintree grows in the United States, there are positive signs that they can succeed in Europe as well. Okay, that's my view on the catalyst. And additionally, even with minimal growth, I still see that there is value. And let alone, it's a leader in the space. It's not just a small company trying to disrupt the leader. It is one of the leaders. It is there. It has the relationships. So if one or two of those plans go well, and we see margin expansion, then I think more investors will be interested and we can see the multiple re-rate. Because even if it moves just in line with e-commerce, it's still enough, I mean, for the current valuation.
Mm-hmm. Yes.
So before I ask you the next question, which it just came to me that you like e-commerce because you have PayPal, that is a payment for e-commerce. You have Amazon and you have Lululemon, which I know they have stores, but they do a lot of their business on e-commerce, correct?
Yeah.
So you must like the sector in order to be so heavily, or maybe it's just a coincidence, but the best and the worst case for PayPal, and this is not my opinion, by the way, I heard this somewhere, is that PayPal is the Facebook that if you go and then ask someone 20 years old, like, do you have Facebook? They're gonna tell you no. I have TikTok and Instagram and Snap. But the older generation, the older of the millennials and the Gen X's, they are the people that have the money. and they're actually spending the money on e-commerce. So those people are using PayPal, and they are the people that actually have the money to spend. The younger people don't have the money yet, so that's the confliction between the old and the young regarding PayPal. But please tell me what is your view on the e-commerce since you are so heavily involved within multiple companies?
Okay, about the point you made, I also agree, but for example, on Meta, it doesn't only have Facebook, it bought Instagram. So now it's appealing to younger generations.
Yes.
PayPal bought Venmo. It was 11 years ago, if I recall correctly. So that acquisition was good. So in the future, Venmo might be part of PayPal's success. So, but I agree on your point that older people, not older, I mean, not the younger generations, have the money. So now about Lululemon, Amazon, and PayPal. Okay, I think I invested in those companies from a different perspective. I mean, PayPal was on the fintech to facilitate the payment, the security of the payment, and the valuation part. Lululemon has a nice growth story, which is questionable now by many, but it succeeded in its first Power of Three plan. It succeeded in its second plan. I mean, it's on track to succeed. It has very strong margins, very high returns on capital. And despite the COVID pandemic, it managed with its online presence to be successful and to gain share. So, but I view that as a retail brand selling clothes, yoga pants, athleisure, but it's part of a brand of a generation. I'm not seeing it as an e-commerce part. And now even management does not intend to separate it in disclose DTC, which is direct to consumer, the online with in-store. So they view these paths as similar, having similar growth opportunities. So it's more about the brand, the returns on capital, and the success today. Now moving to Amazon, okay, e-commerce, it's definitely a part, but you also have the AWS, which is a cloud, another industry. You have the subscription through Prime, which is not only competing with YouTube, with YouTube, Apple TV, etc., but Prime offers a benefit of free deliveries, next day delivery, same day delivery. So it is more than just e-commerce, in my view. So that's why I don't think it's the e-commerce that drove these decisions. For the PayPal, yes, it makes sense. For the other two, it's just a byproduct.
Okay. Go ahead, Akim.
For me, I had another topic that I want to discuss. So I don't know if Dimitri wanted to ask something additional, but e-com.
No, let's move on.
I wanted to talk with you, Adamos, about your newsletter, Stock Opine. I understand that you spend close to full time, so you correct me if I'm wrong, but preparing the content about the newsletter. Dimitri and myself, we're both subscribers. I think we're not premium subscribers, but we follow your content. Maybe you want to tell us a few words about it and what paid subscribers can actually expect. So try to convince us, Dimitri and me, being free subscribers, why we should pay to join it. Will it help us to outperform the market, or what can we learn from Stock Opine?
Okay. I will give just an introduction how it all started, and then I will try to convince you. So I started Stock Opine in 2022 with a friend of mine, with the ultimate scope to research companies, share that research online, and use that research to construct a portfolio. So now to today, okay, it's grown to 7,000 plus subscribers. The premium subscribers are above 100. Okay, the conversion is about 2%, if I recall correctly. I mean, for all newsletters. If you hear anything else, I don't see that happening. It's 1 to 2%. So it takes time and it takes consistency. So the offering that we are aimed to do through Stokopine, first of all, we do all the screening and then the skimming of investor presentations to find that one or two companies we wish to analyze over the next month. Once we find this company, we dive deeper into 10 case investor presentations, listening to various earnings calls to give a complete overview of what the company is doing, addressing, we give the business overview, how it generates money. Then we analyze management to assess whether the incentives align with shareholders or whether the management is not one to be trusted. Then we dive into the industry part to see how the industry is expected to perform, how our company or potential company is performing against the industry. And then we compare it with certain competitors and we look on profitability metrics, on growth metrics, and other KPIs. For example, if you look at Booking and Airbnb, we will evaluate gross bookings, NDRs, room nights, etc. After that, we give a section on financial analysis where we dive a bit into the numbers, explaining certain fluctuations and give our view where the company is heading. Thereafter, number 6, we give the competitive advantages, the risk, and the opportunities for the companies, and we close that with evaluation. But in our evaluation, we provide a sensitivity analysis because anyone's guess is very different from the next person. Because in my view, valuation, it's an art. It's not an exact science, but you need to understand the fundamentals. You need to understand how the numbers plug in to the value. And if you do that and you do certain sensitivity analysis, you can see if there is margin of safety. So all this is given in a single report, which takes about 30 minutes to read and accommodates to users that they have come across a company or they have not come across a company. So because as we build knowledge on that company, we share it. We try not to be over detailed. We don't want to get the reader bored, but we need to give him context. And then we give him the competitive advantages and the valuations, which are very critical for a thesis. And the conclusion, whether we decide to buy or not in our portfolio. So what we do effectively is saving, let's say, 60 to 80 hours of research in 30 minutes. So that's the value proposition, but not on companies that they are gonna exist for the next 2 years, but they are gonna exist for the next 10 to 20 years. So we are looking for those quality compounders and we give the research on those companies, but I'm not looking for that company that is gonna be plus 30% in the next year. So if you are looking to make big money, don't look at Stokopine. If you are looking to do 10 to 15% at least per year, and this is not guaranteed, by the way, not financial advice or something, we are trying to do that because we are looking for those companies because we like those companies. So anyone that has similar investment philosophy, that's what he gets from our newsletter. And beyond that, I mean, we cover companies that we don't buy. But another reader, given his portfolio, he might see, okay, that company is undervalued. The mode that they are giving, they are describing those guys is strong, but I think it's stronger. And it could give to the reader an opportunity to buy that company. We have companies that we didn't bought and they doubled. It's Ferguson. It's a distributor, boring company, and it doubled. So the offering of the newsletter, it's the research and finding good quality stock ideas.
So basically, you just remove the boring part of looking through companies to find something of quality to buy. You just do all the work and you give the reader everything nicely on a plate, and he only has to do 30 minutes of reading and decide yes or no. Maybe I will think about it. That's
Exactly.
okay.
Exactly. And they can
uh,
also DM us and send us a message. We can discuss anything if they need any more clarifications. I mean, we are open to that. And then they take their own decisions because it's an educational research newsletter.
Those analysis you make, Adamos, so it's analysis of companies that you are already bullish on, or are some of those reports having the conclusion in the end saying we don't know, so it's a hold, or maybe some of the conclusions you reach is like it's better to short the stock, or are all the reports rather bullish in the end? So you filter, you do that pre-selection, and then you choose to present to the subscribers only the good companies to go long.
We do the pre-selection, I mean, through the screening to find that one company that we want to analyze deeper. But after we do the analysis, we might conclude that it's not the best company for our portfolio. So we are not necessarily always bullish. But we never say short this company or hold or buy. We are just stating if we are personally buying this company or not.
Okay.
So you're not holding in your personal portfolio, you're not holding all the companies that you're doing research, because it's impossible. I mean, then you're gonna have a bunch of companies in your portfolio. But how many times did you do the research on a company and everything is there? The financials are there, the mode, the management, everything. But something you feel in your gut that, I don't know about this one. Everything looks good, but I don't feel it in my gut to buy it for myself. How often that happens? How often you are conflicted about the research that you did, that you know it's solid, you know that a good investor, you're going to see this and say, okay, everything is there, the fundamentals are solid, the management is top notch, but something inside me doesn't feel good. How often that happens?
How often? It does happen. I mean, usually in a year, we buy 10 stocks. I mean, if I look back in 2023, we bought 10 stocks, but we covered over 20 stocks in detail. So even at the beginning, the company might be looking great. If you dive deeper, you've seen some indications that, okay, it's not that quality, it doesn't fit my portfolio, so I'm not gonna buy. That doesn't mean that the company it's not gonna succeed, the price is not gonna go higher, but okay, you have the personal emotion, and that's the good thing. I mean, if you separate eToro with the newsletter, eToro, if anyone copies you, like Akim, like myself, he just follows our portfolio. But on the newsletter, he has the research and he's given the flexibility based on that research to assess if it's a good fit for his portfolio. I might have the gut feeling that it's not a good stock, but you might read the report and say, okay, that's a fantastic stock. You might see something, or because of your experience or the industry you are working with. I mean,
no, I was talking about you personally because I want to get a feeling what kind of investor you have. I know we've spoken many times, but we never got so deep into a conversation about stock picking. And I know you're a stock picker like all the way through. So I'm trying to understand how exactly do you do it, because I have a different way of doing it. Akim has a different way of doing it. So I'm trying to understand exactly what is your go-to, how you exactly do your selection process. That was why I was asking.
okay. Yes, as I said, I don't feel sorry about my research. I mean, if something doesn't seem good to me, I don't buy it. I mean, okay, I've spent the hours, but I learned something. I learned something about a new company or the wider industry, because in the supply chain, there are many parts. You might select to read one part, which will help me understand something better on an existing company. So I don't mind if it's not a good company. If it's not, I'm not going to buy.
Okay.
Or if I don't feel comfortable, because as I said at the beginning, I just want to sleep well. I don't need to worry about my portfolio.
Yeah.
Dimitri, talking about a gut feeling. Well, how what can that gut feeling be based on? Just for our audience to understand. If you say everything is great, the financials, the management,
I don't
why
know.
would you have a bad gut feeling?
I don't know what it is. I can't explain it. Okay. And I read about it. And some people, some great investors, they claiming that it's just the information you have subconsciously in your head about the companies, about the sector, about the market. And something inside you is telling you something is not right here. And it's not always right, by the way. Sometimes you get fooled. So, and then that's another risk. But I mean, I don't know how to explain it, but and to go back into our first episode, when you asked me how did you buy Nvidia when it was $150 after I bought at 200 and it went down another 50%, and you asked me how did you buy Nvidia at that price, and me knowing what I know about the company, I had a gut feeling that said, okay, it's not going to zero, okay. I have is not too much high of my allocation in my portfolio, so I don't have 20% on it. So it's gonna kill me if something goes wrong. So everything was together, and then the gut feeling told me okay, and then I pressed it, and here we are, like 2 years later, and it's doing pretty good. But I mean, I don't know, maybe it's just me, but I believe the gut feeling to do or not to do adds another level of complexity into the investing process. You have to know what the fuck you're talking about. I apologize. You have to know what you're talking about. You have to do your research, okay? And then sometimes, how about okay? I have an example.
So your Excel sheet, Dimitri, your Excel sheet, right? Your selection sheet for stocks. So you have management, good, bad, financials, good, bad, valuation, good, bad, and then gut feeling, yes, no.
Gut feeling.
The gut feeling is just before you press the buy button. And I bet you last week when you entered the short selling position in GameStop, to go back to that, I believe you looked at all the numbers and you explained them in the last podcast. You looked all of that, but something pushed you to go short, especially you. Other people go short for no reason, but you to go short in a portfolio that it's not risky at all. You're very careful how you do things. I believe some gut feeling play a role in it. I believe.
I tend to
That's-
agree. I mean, about the gut feeling, look at Meta. Similar thing in November 2022. Everyone was against Meta. It's falling. They are spending billions in reality labs. What's the future of Meta? But I had the gut feeling. Yes, we all of us look at the numbers, but I had the gut feeling that the market is not pricing this well, because I just thought, okay, Zach is not stupid. I mean, he has his wealth in Meta. If Meta does not succeed, or these reality labs does not become the next growth driver, he has the option to stop it. It's a real option, and he has it. So I felt that that's too cheap. One could say that's the same you said for PayPal, but it's still struggling. So, okay, you have to trust your gut feeling, but also use the rationale behind. I mean, you look at the numbers. And when Dimitris did that with NVIDIA, I'm pretty sure that in his mind, he got the gut feeling it's not going to zero, it's not going to 300, but it's going to 250 at least.
Yes.
And then he got lucky.
Actually, I can find here a little common point, actually. So Dimitri bought NVIDIA when the whole market was selling it off. Adamos, you're talking about Meta when everyone was talking bad about Meta. In my case, I shorted GameStop when all the traders got crazy about GameStop and saying to the moon. The common point I can see to those three decisions that we made, the good decisions we made, is that we actually, and that's maybe a synonym of gut feeling, is being contrarian.
Yes.
We went against what everyone was actually saying. And I think it's Dimitri who found that quote saying a good investor is one that masters the art of catching falling knives.
Mhm.
And PayPal, we talked a lot about PayPal this episode. I'm not saying PayPal will go up. I'm just saying PayPal is in this is also now being really talked badly about by all the media you can hear, all the news. So maybe it is worth to check yes to gut feeling when you analyze PayPal. Actually, do you guys agree that it's important to be contrarian in those kind of decisions, or is it better to stay away when a stock is too hotly spoken about in both ways? For example, Nvidia. Now everyone is bullish about Nvidia, saying it's going to the moon. So I don't know. I'm like I see the fundamentals is great, but I'm wondering, and I want your opinion on that, Adamos, because I already know Dimitri's opinion on Nvidia. He mentions it every episode. I want your opinion on this, Adamos, because if I'm not mistaken, you correct me if I'm wrong. I'll double check quickly. You don't have at all NVIDIA actually in your portfolio. Is it the gut feeling that told you not to add NVIDIA, or what happened? What is the reason not to have NVIDIA in your portfolio?
To be honest, it isn't gut feeling. I mean, if you look at the fundamentals, the growth rates, and the expectations going forward, someone would say, but NVIDIA, it's cheaper than last year, it's cheaper than 2 years ago. But my gut feeling tells me, okay, how long NVIDIA is going to maintain this competitive advantage? I don't feel comfortable. At these price levels, I don't. It might double in the next 6 months. But personally, given that we are in industry with hype, the AI industry, and we looked what happened with metaverse, what happened with cryptos, now they are recovering okay. But I mean, when there is hype, there is high risk. And my gut feeling tells me, at this point, stay away.
I agree with you, Adamos, about this. When you have a lot of companies coming after you and after your margins, when you have good quality companies, right, like AMD, Qualcomm, Intel, etc., that are working to get the share from you, so you being Nvidia, there is some kind of risk, especially in the middle of a hype. But I can see Dimitri smiling all the way because after the good earnings from yesterday, he's getting a couple percent more on his position.
I'm smiling because I don't have a good gut feeling about Nvidia right now either. I believe it's getting out of hand. So, and it should be wise to take some profits somewhere around these levels and just take some off the table. But
Are you taking some profits? Are you reducing your exposure?
I haven't. Let the market open today and see how it goes. And also they announced the 10-for-1 stock split, so that could add another leg into for the bulls. But to mention something about Meta and about Nvidia, when me and Adamos bought the two companies that we just talked about, it was a bear market of 2022. So just being positive, you're basically a contrarian if you think the sun is going to come up tomorrow during the bear market. Everything was negative, okay? It didn't matter if it was Microsoft, Amazon, Apple, everything was trash during the bear market. So even buying quality companies during the bear market, it was like quite a contrarian. And for you as well, going short on a day that GameStop is going crazy on the feed and on Twitter, it's exactly the opposite, but it had the same effect. So, and I believe it comes down to is the gut feeling, and are you able to buy when everyone is hating the whatever stock? Can you buy it when no one wants it? I believe it's key when it comes to investing, at least to buy it right. So now Nvidia, I'm up 300%. So if it goes down tomorrow, it's not going to bother me that much because I'm already sitting on too much capital gains. But to answer your question, my gut feeling about Nvidia is not good right now because it's 100% year to date, 200% 200, no, it's 100% year to date, 200% in the last
Last year.
year, and
Mhm.
500% in the last, no, 2,500% in the last 5 years, 25x in the last
Mhm.
5 years. So it's getting a little bit risky,
Mhm. Mhm.
even
Yes.
though it's cheaper than last year.
Indeed, that's what they say. But yes, we had good earnings yesterday from Nvidia.
Akim, one
S-
point to add to
Yes.
Dimitris about the quality companies and during 2022. In my view, in my theory, when a company is a leader and it's quality stocks, during those times, even if it faces temporary challenges, it will come up back stronger because during difficult times, the weak are going bankrupt, not the leader, usually. So that gives you another level of comfort. But on the other hand, if you look at the market overall, the market follows a herding behavior, doing whatever the person next to them does.
Mhm.
So that's another issue, and that's why, although many claim that the markets are efficient, and they might be, but on certain occasions, it gives you good opportunities. You need to have the patience, the emotions, and be ready. Because if you've done the analysis like Dimitris did a few years ago, then he knew that he wanted to buy at that time.
Mhm.
And he knew that he was taking a risk as well, but
Yeah,
that's
Yeah.
a game.
there's always a risk, and taking the risk then is not even compared to taking the risk to buy Nvidia today. It's not even comparable. I would much rather buy it back then than buying today.
And that's also the role to conclude on the episode. That's also the role of your newsletter, Stock Opine. It's there to bring the truth, right, to the subscribers, to the readers, to not be just in that herd and buying whatever is hyped, but to actually look at more detailed layer on the companies that you spotlight.
Exactly. That's what I'm aiming to do through the newsletter. We are trying to provide an unbiased research so as to allow the reader look at the numbers, look at the qualitative characteristics, and decide whether that company is good for them. We don't want to tell them, oh, that stock is going 10% tomorrow because X and X and X. We just give them unbiased research on quality stocks and allow them to take the decision. So that we provide the research on those companies.
Yeah.
Mhm. Okay, thank you, Adamos, for joining us. Ladies and gentlemen, it's Adamos, co-founder at Stock Opine. We will put a link to our episode where you can visit Adamos' LinkedIn profile page, and you can also visit the Stock Opine website. So thanks a lot, Adamos, for joining. It was really interesting, actually, to hear, but I genuinely mean it. I learned a lot about PayPal. I know for Dimitris is also the case. So thanks a lot for joining. Much appreciated.
Thank you very much, guys. It was
Thank
a
you, buddy.
pleasure and I really enjoyed it.
Thank you, buddy. We're going to post this on YouTube, on LinkedIn, on eToro. We're going to post it everywhere. I will let you know when it's posted. And
Awesome.
we'll talk soon.
Yeah,
All right.
thank you.
Thank you
Thank
guys
you.
very
Cheers.
much.
Bye.
Have a good day.
Bye-bye.
Bye bye.